Adam Gower here, and welcome to the GowerCrowd Podcast syndication in the digital age. I had a very pleasant conversation with my guest today, Jacob Blackett, who is founder of Syndication Pro, before we recorded today's episode. And what I discovered and what you're going to hear about is how he helps his developer clients tap into that subconscious marketing response, FOMO. The fear of missing out. FOMO is one of the primary triggers that drives consumer action, and that, of course, also applies to investor intent. And there are two things going on with FOMO. One, the natural desire to want something that everyone else has, and two is in knowing that unless we act quickly, that something is going away, i.e. that it has scarcity of some sort. So to effectuate FOMO and raise more money, you have to show that one, other people are investing, and two, that the window of opportunity to invest is going to close. Now, there are some classic language patterns that you can use to trigger the FOMO response in your marketing, like, for example, join the waitlist, or deal closes for investment on Friday, or almost fully subscribed, amongst others. Jacob Blackett's company, Syndication Pro, is a back-end investor management system similar to CrowdStreet Connect, IMS, Juniper Square, etc., who they compete with. And they've built into their platform a killer FOMO function, the investment reservation option for when a sponsor is in between deals. It's really cool and is not dissimilar to the waitlist system that Origin Investments famously used to raise $105 million in 17 hours. Before we get going, and if you've not already subscribed to the GowerCrowd newsletter, please go to GowerCrowd.com and sign up there so you can get access to free training and other content that we put out regularly, as well as access to special offers on some of the courses that we produce that show you how to raise capital online or how to invest in crowdfunded deals if you're an investor. There are options there on the homepage at GowerCrowd.com for you, whether you are a developer raising capital or an investor looking for opportunities. So just select whichever option applies to you, and I'll get you some resources that you can use immediately. But hurry, we have some brand new training coming out in the next couple of weeks that we're only going to run once. So don't miss out on that. See? FOMO. Oh, and one final word. A hearty thank you to Shane Mallinson, who made the introduction for me to our fabulous guest today. Thank you. Sincerely, Shane. It was really thoughtful of you. Really appreciate it. All right, so here we go. Delighted to introduce you now to Jacob Blackett, founder of Syndication Pro. Jacob, thanks so much for joining me today. It's great to see you again. We had a fascinating discussion last week about the fear of missing out, right? So we're going to talk about that a bit today. So anyone that's listening, stick around for that because that's an absolutely fascinating topic. And Jacob at Syndication Pro has a tool that triggers that response in investors. So it's certainly something you want to stick around for. But before, Jacob, we get into that, let's start talking instead about Syndication Pro. And actually, you know, my interest is in figuring out how you find clients, right? How do you use digital marketing to reach developers? Because we're both going after the same market for different reasons. So I'm dying to know what you do to find clients and what works best. Totally selfishly, yeah. I want to know that.
Yeah, that's great, Adam. So quite honestly, the bulk majority of Syndication Pro clients early on, it was my fellow colleagues. So I am a fellow sponsor, fellow real estate sponsor, and so I was well networked in with other colleagues and other firms, and so that's where the ball got started. So it's very close knit, just friends and colleagues in the space doing what I did, managing real estate firms and syndications and raising money, and so just a handful of early users got the product going, and as you probably know, Adam, when you build a good thing, the most powerful thing that comes along with that is word of mouth, right? And so the vast majority of our growth has been word of mouth. There's certainly people who find us organically, just searching syndication platform or investor portal or something to that effect. So a lot of people find us organically, but certainly our biggest growth driver right now is word of mouth. Now we are starting to focus on some growth. And I don't manage growth. So my partner, Amit, he's the growth guy. So doing certainly SEO work, content, of course. I love to get together with individuals like yourself over a podcast to share what's going on. So just getting that exposure and making content and pushing that out.
So now, how long is Syndication Pro? When did you found the company?
In early 2018, Syndication Pro was formalized.
Okay, so you're 2 years in. Tell me, what trends are you seeing in the industry? Because I was wondering if I'm interested to see what kind of indicators there are for the migration of real estate sponsors to the digital realm, right? I mean, we know that we're both sponsors. I've been in it for 100 years and more. And I know that most sponsors, self-included when I was doing it, used Excel basically to do everything, right? And in fact, funnily enough, actually, we should talk about institutional sponsors. I'll tell you, I had an interesting conversation with a guy just recently who's going to be on the podcast, all being well. I'm going to record with him in a couple of weeks. We'll talk about institutional sponsors and his response to what I was saying. Mm-hmm. But I'm always interested in indicators of the migration to the digital world. So tell me something about what you've seen in terms of traffic and interest in your product that could suggest there's more people moving into the online space to raise money.
Yeah. So historically, fundraising, real estate, it's a little slow to adopt on the technology side of things. And so from a trend perspective, what we see a lot of firms and shops coming online, the main motivations are, of course, saving time, right? Because we can automate so much of this entire process so that there's time which relates to dollars and direct scaling of the company. There's security. So previously, it was very segmented in terms of how maybe you're sharing investor reports or K1 documents or collecting the preferences of how your investors want to be paid. Email's not a secure method to handle those types of communications. So creating a more secure infrastructure is a big motivation to moving. Centralization, like you said, if you're not online, you're probably juggling a bunch of Excel sheets. You have different Google Drive folders or Dropbox folders, or who knows, maybe you're even using your property management software as kind of a semi solution. And so getting all of that centralized, getting the team into one place. And in terms of a really recent trend, capital raising, it's very hard to traditionally raise capital in the form of meeting investors, grabbing coffee or tea. There's that whole face-to-face element is not there. So I mean, it's very difficult. So we see a lot of motivation in terms of trying to figure out how to adopt this online infrastructure so that you don't need to be having so much face-to-face, and it's really COVID-19 driven in terms of being able to scale the business out, and since you're really not afforded that ability to go and meet and greet and do meetups and events and all of that.
So Jacob, and you've actually seen that. Have you actually seen an increase in traffic to your business since COVID because people are realizing that they can't meet people in person and so have to act online? Is that something you're actually seeing?
It's feedback that I've directly received and heard.
Mm.
In terms of our growth, luckily, we've been growing pretty steadily month over month. So I can't necessarily point and say, hey, like, ooh, there's a good uptick here. But yeah, I think it's very real feedback.
So that's one factor, is the benefit of being able to conduct business online. And obviously, everything that's going on at the moment is a catalyst for that, right? It just accelerates that natural growth anyway that you're describing. But one of the biggest challenges that I find sponsors have or developers have is, while the idea of automating and saving time is very compelling, the time it takes to automate is an overwhelming hurdle. So I know it's good for me and I should do it. I don't have the time, right, to change everything, because you're changing decades old practices. So how do you guys overcome that when somebody comes to you and says, yeah, Jacob, I really like your product, but I'm so slammed at the moment, got no chance?
Yeah, there's a couple approaches to that. So our team has become very good at migration and onboarding. So it's what we refer to as a white glove service, where we set the infrastructure, we set up the data, we put everything in place so that the developer or the sponsor, the real estate firm, they can come in and now just focus on how to use the tools. And I think one thing that really differentiates us is that it's simple and intuitive, the product that we've delivered. And so a lot of early investor portals and currently, unfortunately, are a bit clunky and complicated. And so I think that's a big holdback in what we've seen for people to adopt those current portals that are out there. And one of the biggest feedbacks that we continue to get is the ability of the firm to jump in, understand and intuitively use the product, their team to actually use it. It's a cornerstone of our development is the simplicity and ease of use.
So what is the kind of pushback that you get when a prospect knocks on your door and discovers what you do for the first time? What are I suppose, what are the FAQs? But let's start with, what is their resistance typically? I mean, I've suggested that we don't have the time, but what else do you hear that you have to overcome?
Yeah, it's a pricing concern, of course. No matter how you frame that payback period and the investment and the return on those dollars, you're trying to convince someone, like you said, that may have 10 plus years of a system in place for handling this, even though they could save 90% of their time. The fact is they still have a system in place, and now they're having to get over that hurdle of investing some extra dollars to get into the next best infrastructure. So that's certainly one of the hurdles that we face. A lot of times with clients who switch from current portals out there, they're kind of in the same position, not wanting to take on the additional time and effort that it may take to switch. And so while we have made that process as seamless as possible, it's a valid concern and something that we always try to address.
So I asked you this when we first chatted. I want to ask you again. When somebody comes and signs up with Syndication Pro, do you notice that they've taken that step and they've decided that they are going to automate and invest both time and money in order to save time and money, especially, and also the liability issues, et cetera, that we know about that you've already alluded to. But do you notice any particular characteristics in the sponsors who are more amenable to signing up for Syndication Pro than those who are not? And that might be, for example, yes, the ones that have been in real estate for less than 10 years jump on it. Those that have been around for 30 plus years, they're the hardest to sell to. Or something else? Is it, do they have better website presence? Do you notice that they have strong social media? Are they more tech savvy in general? Just what do you notice about them as a class?
Yeah, it hands down those who seem to be more tech savvy, who might have more polished looking websites, who are adopting technology, are fast movers. There are clients who will sign up and start using and subscribe, and they self-serve through the entire process. And when we ask them if they need help, they say, we love what you got here. Nothing needed now, right? And then the other end of that spectrum is someone who had their website built out in the early it's a 20-year-old website.
Steam
It's
right.
yeah, it's like kind of give me the step-by-step, more training, more hands-on, which is fine. But yeah, there is a pretty vast difference of the customer profile in adoption.
And what are let's start migrating into this discussion about your reservation system, which is just fantastic. I really like this. As you know, I'm a huge fan of it. So let's kind of float into that discussion. Let me ask you this. So now you've got a sense of the characteristics that a sponsor has from a tech perspective or tech acceptance perspective when they come on. But what about their best practices for actually raising money or attracting investors? So, right, what do you notice about those that do best on your platform?
I think a very powerful feature that those who have a lot of success raising money online is really capturing the interest of the investors and the leads prior to the deal actually being available to invest in. So I think those who I see are most successful basically pre-fund their deal in a sense. They do a good job of getting the interests, getting people lined up and ready so that when the deal is available to invest, those investors are taking action because they don't want to miss out, right? And they want to be a part of the deal.
Well, so now that just begs the question, how do they line up those leads? That's what I'm getting at, right? How do they do that? What are they doing so effectively that's really moving the needle for them?
Yeah. We found this very powerful. I found it directly very powerful because, of course, I raised money for my own deals. And so we created the infrastructure where you can post a reservation directly through the platform. You can drive traffic to this reservation, all of your leads and prospective investors, where they can basically get a teaser of the deal, what's to come, and they can place a reservation or a soft commit. Basically, they're getting on the wait list for the deal when it's available to invest in, because of course, most real estate sponsors and developers, most of the time they're not raising money. It's this in between time that's really important to get everyone in line. And so this gives our clients the ability to get the ducks in a row, and also investors love to be able to get that sneak peek. They're able to see it, see what details are available on it. They get one foot in the door with that reservation. And we typically tell our clients to frame it up that this is an opportunity for their investor to secure priority in the deal. So it's their ability to get a priority to invest over anyone who doesn't make a reservation. So they're incentivized to do this, but it's very powerful. It gives the sponsor a list of everyone who's made these soft commitments, these reservations on the deal. Very user-friendly and easy for the investor, and very powerful.
All right, so you've jumped ahead a little bit of the curve there on me. Let's definitely pick on Mark. I do want to drill
just
down
went for 10 minutes.
And how that actually works. I do want to know a bit more about that. But I'm still interested to know if you see anything. Maybe you don't. I mean, you're a sponsor yourself, so you have to go through this process. But what you described was giving prospects or giving investors the opportunity to soft commit, right? To make a reservation. I think that the point you make is very well taken. It's very interesting because a lot of sponsors go from deal to deal with a long period of time in between. It's actually exactly how I studied throughout my entire education, was basically doing NAFL that was really important until about 4 weeks before an exam when I went into total panic. That was how the system works in England. You didn't have to study at all because your entire grade was based on 1 3-hour exam. So I did nothing for 10 months and then panicked. And that's kind of maybe why I became a sponsor, because that's a bit how it is in real estate development, right? You run around finding deals, and then you find one and you go into a panic to try and finance it. So you've described that kind of panic phase, right? Where you can put reservations in up to that and get them lined up. But what I was actually really interested in hearing from you, and we'll get back to the reservation system in a minute, is how are you seeing sponsors are filling that pipeline with prospects and with investors to whom they can send an invitation? It's no good having a reservation system if you don't have prospects. So how are they doing that? What are you seeing are best practices for sponsors to get people into the reservation system?
Yeah, it's through email. So there's direct link to the reservation. And so that way you can garner that interest. You can share that link via email. A lot of the times, your contacts, your investors, they'll end up forwarding along the email, right? And so you're able to pick up referral leads through that as well, but it's primarily through email.
Do you see them using social media or advertising online or other techniques to kind of troll for prospects?
Yeah, it depends on the customer, but if our customer is doing an offering that allows general soliciting, then yeah, that's where maybe I see it on my social media scroll and I click and say, oh, that's cool. That's that's our platform, and it's more out there. Other clients who don't generally solicit are primarily sharing the link with their current closed book of contacts via email. So, but yeah, it definitely can be out on those different channels.
All right, so let's talk about the fear of missing out a little bit and why the idea of the reservation system works. First of all, how did you come up with this idea? Tell me a bit about the background, because it is, as far as I can tell, it is unique, at least the way that you deliver it. So how did you come up with that idea?
It comes out of direct experience, and I think a lot of our unique features are developed this way. But back in 2014, when I was raising money for my own real estate deals, still do today, of course, I was in that position where I wouldn't have a deal for a few months, but I kept having these new calls with new prospects, new investors, and I was thinking, because at that point they've already found me, they've signed up with me. Now we're having an introduction call or meeting, and I got tired of saying, okay, well, we'll keep you updated and just wait for our next deal to be available. I wanted what was the next step? What was the next step in that process? And I thought that if we were just able to get a teaser out there and take reservations.
So let me jump in there. How does that work if you don't have a deal? Sorry to cut you off, but how does that work if you're not got a deal? So a lot of people don't, right? So what are you actually communicating when you send out an invitation to make a reservation?
So at its infancy, when you don't have a deal, you honestly don't even know what your next deal is going to be. At its infancy, it can be broad-based. So for example, for me, our firm purchases multifamily apartments. And so when I have that reservation and I don't have that next deal, it's just speaking about our next multifamily investment. It's talking about our regions where we invest, the types of deals we purchase, the types of targeted returns that we target for our investors. maybe it has a little blurb about our experience, our track record of delivering, and then maybe I include a little slide of my most recent deal, so that they can get a taste of what the last deal was. And then that's usually at its infancy, kind of a broad-based, open-ended reservation.
Okay, so it's educational would be one way to put it, right? And
Yeah,
you
definitely.
describe your view of the world as well, and how you see real estate and the market, and you're communicating with prospects effectively, right?
Yeah. I like to keep it, of course, shorter than longer, short and sweet, effective. It's usually no more than 5 to 8 sentences. And then as you do get that next deal, and that process is developing, you can just tailor the reservation to update it, right? So you're just providing a little bit more details now. Now we might have the deal. We could get rid of some of the broadness and make it more targeted. And then as that deal cycle develops, you can just get more and more precise. It's really easy to change those details on the fly.
That's interesting. So as you move through time, you see a deal that you like, you start to communicate that you are in due diligence on a deal, that you're looking at a deal.
Mm-hmm.
And then presumably there are plenty that you pass on as well. So you can create this kind of crescendo of anticipation. And this is where we get to FOMO, isn't it? Fear of missing out. You create this crescendo of anticipation in your audience that a deal is going to happen, and then take it away by passing on the deal, right? So you kind of have this almost an anticlimax, but it builds anticipation, doesn't it? Tell me about that. What has been the reaction from prospects when you've told them about a deal that you've actually passed on and not, in fact, pulled the trigger on?
This has happened, and typically it's an excellent opportunity to provide an educational moment for the database, because you get to talk about why you passed on it, why it didn't work out, which is a great. It's unfortunate, right? We want to do that deal, we want to make it happen, but sometimes the best deals we do are the ones we pass on, right? So I think it's just another evolution of our process. Everyone goes through it, and I think investors really appreciate that transparency that they probably don't get with other potential firms that they're investing with, to be able to have that kind of insight and be able to be tracking the status of the next investment.
Yeah, fascinating. So now we get into this idea of fear of missing out. So now what you've done is you've kind of teed up your investor base to, well, you've educated them. You've told them about your background and about what you're looking for and why you're looking for it. And you've also gone through a case study, a real life case study of why you pass on deals. And then also, that gives a sense for actually how tough it is to be a developer, right? I mean, it's not an easy thing. It's a lot of work involved. But now you're also moving towards, now you get a deal in place that you are going to close on, and all being well, you're going to close on it. And you were just telling me before we started about a deal that you've just closed or just raised money for. So tell me something about the life cycle of that capital raise that you just closed in the context of your reservation system, because that was very interesting.
Yeah. So it had been actually our last deal that we had closed was back in April. And so COVID-19, things are going on. We had a dry spell. And so we just funded our most recent deal last week. And so heading into the capital raise, we had this reservation open for months now. We were able to see that we had 5.5 million in reservations going into a $2 million capital raise. So we felt really good, right? It's a really good really nice position to be in. There's a certain level of certainty that, hey, we have the dollars lined up, and so we could focus on due diligence, for example, or other parts of the deal, not necessarily feel worried about, is the capital going to be there. So when we got to the point of launching the deal, it was really a few, of course, email sequences to get there, setting a time. It was noon Eastern on a Wednesday that we were opening the deal for investments. First come, first serve. Those with reservations get a priority in the deal. And by 5 p.m., it was 80% committed, and the next day wrapped up.
Did you say first fund, first served? Is that what you said?
First come, first
served. So, okay, yeah. So now I'm just a little bit confused, but that's not difficult. I'm very easily confused. So you've got a list now of however many investors, all with soft commitments. And I want to talk about what that means in a second. But they're all with soft commitments for 5 million, and you're raising 2 million. So when you open that raise at noon on Wednesday, are you not? How are you prioritizing that order? Don't you have to wait for people, in the 1 to 2 million, range, like whoever's in that, the first 100 people, picking a number out of my ear, but the first 100 people, don't you have to wait for them to fund? How do you prioritize? What happens if somebody who hasn't invested sends you $1 million check, or hasn't entered the reservation, system? How are you prioritizing?
It's reservations come first. So of those who committed, all of them had placed reservations and commitments, and so.
But the distinction is, where's the money? They've made a commitment, right? They've made placed a reservation. They've placed a commitment or made a commitment, but they've not wired you money, and so it's not or signed documents, because there haven't been any until this point, right? So how do you? The conversion is when they actually send you a check and signed. When the check clears. I should be specific for that. Having worked in a bank, I learned that the hard way. When the check clears and documents are signed, that's the real investment. So how are you actually creating this priority? By the way, I've got a gnat distraction. So if you see me kind of doing this, it's not because I'm going mad or anything.
So at noon on Wednesday, when they place an investment request, they sign the documents as part of that request, and they also tell us they see the funding instructions, and they communicate how they're funding. We do checks or wires, so they'll communicate at that point, and then we typically tell them within 3 business days they need to fund, and so once we get all those commitments through, it's really a process of giving them a few business days to process that. You can see all the notes and all the intentions of the investor. If someone didn't sign, for example, that may be, you could waitlist that individual and take someone else, for example. You can kind of move those statuses around. But what we find historically over the last 19 syndications is that if they've made a reservation and they've made an investment, it's 95% locked down that it'll go through.
They made an investment, you mean in a prior deal?
Sorry, they made the reservation request, and then they also made the investment request in the deal. So that at that point now where they should be funding.
Got it. And so now you give them, from that 12 noon, you give them 3 days to actually fund or something, or lose their position in the wait list, in the reservation.
Yeah, typically.
Very cool.
The people who don't go through are usually go kind of ghost early on. Maybe they didn't sign the agreement. That's a big red flag initially. They didn't tell you how they plan to fund. They don't return an email or a phone call within a day or two. And so usually those are easy to sift out within the first few days of the offering, and really have a good idea of if you need to. We also we didn't do it on this deal, but we have in the past taken a few extra investment requests and waitlist them. And so the platform can waitlist them. They'll get a notification saying, hey, unfortunately, there's not enough room at this point in time, but it could change. And so stay tuned for an update within the next week or two. And then that way they're kind of lined up in case something doesn't work out with another investor. You can just swap them right in.
Interesting. So it's almost, it's like, one of the biggest challenges, we've both talked about this, is this idea that you find a deal and then suddenly go into a kind of frenzy to finance it. There's just this short period of time during which you're doing due diligence. You've also got to raise the money. So this kind of mad rush to get everything done at the same time. And that what this does is that it ameliorates that problem, at least on the capital formation side. So it kind of works like it's like a pseudo fund in a way, isn't it? But you're not taking any hard commitments, and this is on a deal by deal basis as well, isn't it? Mm-hmm. No hard commitments. Exactly. So these are all soft commits. Have you thought of doing a kind of partial hard commit as well? If you want to get on the reservation list, wire 10% now or something of whatever you want to commit to the next deal.
Yeah, basically a deposit, right? It's certainly floated out there, but we haven't implemented it because we've just found that it's doing a good job now.
The way it is.
But maybe down the road, it's an additional option.
And what percentage of your clients who use Syndication Pro, what percentage are taking advantage of this particular component of your software, the reservation system?
I honestly do not have that statistic. I've seen it and I've heard great feedback. Really, it's a good selling point, but I don't have the statistic on hand.
Oh, I see. All right, I was going to ask. I'll
have to look it up.
Yeah, it's not critical. I actually thought you were going to say everyone. Actually,
they should. Everyone should be.
Right. It is a useful tool, isn't it? All right, and then this is let's just wrap up this thought of fear of missing out. So what it's doing is it creates this, we talked about anticipation, but also this fear of missing out. So talk about that a little bit and why you think it works as well as it does.
Well, you are probably more of an expert, more knowledgeable on this. I have used it directly in my business and have just experienced it firsthand, the power of having this system in place. I honestly don't know if I could break down fear of missing out anymore from a mentality perspective. I'm really not a marketing individual, so yeah.
All right, fine. So then, you know what, that actually does lead us to the idea of the webinar that we might end up doing together, right? So that is something that we can talk about. And we did chat about how to add some extra octane to a capital raise if you have a reservation system as well. So well, let's save that for the webinar. We'll let everybody know when that's going to be, hopefully within the next few weeks. Jacob, let me ask you this. I would like to, because I actually can't believe how much time we've already been talking. It's really incredible how fast time flies and how much I'm enjoying talking to you. So I want to sign off with 3 questions that I ask all of my guests. And eventually, maybe sooner rather than later, I might actually create some kind of maybe a book or something, a video book or something with these, everyone's answers, because everyone's so bright. 3 sign-off questions. What advice would you give to somebody who is just starting out syndicating real estate online? What should be the most important thing they should keep in mind?
Just starting out, syndicating real estate online.
Online, yes. So online being the key thing. They may already be doing syndications, but they're migrating to tech and online, social media marketing, etc.
I wouldn't underestimate the adoption of their investors into the process. A lot of people fear that it'll be too complicated, too difficult for their investors to adopt. So my advice would be to not worry about that. The system you should be using should very well solve for any type of investor needs or their ability to actually place the investment and participate with you.
Very nice. Now, second question. And so either you are holding up very, very well, or you're a lot younger than I am. I'm guessing it's the latter. But so you are more familiar with online and being online than I am, right? I mean, I have actually had to learn it. I can even remember life before faxes, for crying out loud, a very, very long time ago. So what's been the hardest lesson that you have learned online?
And if that's lesson.
Yeah, go ahead. Gosh, I totally stumped you, didn't I? I didn't mean to. I can ask you another similar one. Any hard lessons online?
Something that comes to mind is related to marketing emails and mass email communication, and learning the hard way of once you send that email to a few thousand people, there's no holdbacks. It's done. And having to explain something. If you send an email to a mass group of people and there was a mistake or something misspoken, or it's a lot of work to start explaining that to every single person who now is asking you. Or if you create confusion, for example, on an email, or you're introducing something, but you're not thinking about how the receiver is going to see that and what will their first few questions be. For example, you announce a new deal coming soon, but you don't provide any guidance in terms of when. What does that mean? Does that mean a few days or a couple of weeks or next month? And so you actually create more work for yourself if you don't thoroughly think through your mass emails so that you address everything that's needed. Otherwise, you just create more work in terms of addressing everyone's same exact question that you should have included in the first place. So
it's funny. So I'm so glad that I allowed you the discomfort of pausing to think about that, because that is such an important observation. You know, what the hardest thing I do I think I sent 2 million emails last year, at least 2.5 million, maybe one way or another. And I find the hardest thing I do on a day-to-day basis is prepping, formatting, writing, and double, triple, and quadruple checking every link and every word in every email. And there's always a mistake. It seems like, I don't know how that happens. Always something's not quite right in the bloody emails that I send out. Last question. What are your key daily habits that keep you successful, and particularly successful online, if there are any particularly?
Yeah, I keep a hot sheet. I call it a hot sheet. It's a notepad, and it has a few things that I feel like keep me in line and on base. So number one, there's highest value activities. So really identifying in my businesses what activities that I do that move the business forward, right? So I have those high value activities that I try to review every day to keep me focused and moving forward. I have a grateful list of everything I'm grateful for, and I try to go through this, add to it, adjust it on a daily basis. It has the hot sheet has long-term goals in addition to short-term goals. It has reminders of leadership skills and my own character strengths, because one thing that I took away is really leaning into your strengths and finding people to offset your weaknesses, right? So staying focused, and also my business value propositions, staying engaged with the value that I'm driving and bringing to other people out there, and help stay motivated and stay on top of my purpose.
Jacob Blackett, partner at Syndication Pro. Thank you so very much for joining me today. It was a real pleasure to see you.
Thank you so much, Adam. I'm looking forward to our webcast coming up. Selfishly, I'm looking forward to learning a lot from you.
That was Jacob Blackett, founder of Syndication Pro. And to wrap up today, I'm quite serious that we do have some new training that we're in production on that will walk you through the language of digital marketing. And also we're about to announce the publication of my new book by Routledge, Real Estate Crowdfunding, an Insider's Guide to Investing Online, that is geared entirely to investors. So if you've not yet subscribed to the GowerCrowd newsletter, please go to GowerCrowd.com and sign up as either a developer or as an investor, and I'll get you some highly tailored educational materials right away. Hey, thanks for listening, and thank you, Jacob Blackett, founder of Syndication Pro, for your time with me today. Super pleasure meeting you and talking to you, all thanks to Shane Mallinson. That's all for this episode, and I'll see you next time. In the meantime, stay well, and for now, this is Dr. Adam Gower, signing off.